Bitcoin just swept one of the most important lows on the chart, and most traders are looking at it completely wrong. Because even if this range gets reclaimed, that doesn't automatically mean Bitcoin is heading higher.
Yes,
Bogdanov, he did it.
he bought,
He went all in.
dump it.
In fact, there's a major problem nobody is talking about. The move up did build up liquidity. The move down basically destroyed it. And if you don't understand the difference, you're going to misread the entire market. So at the end of this video, you will have 3 scenarios that makes a lot of sense. And I will take you 2 exo charts and showing you the key levels in the order flow. So stay with me, like and subscribe, and let's dive in. Bitcoin just swept the most important low on the entire chart. And naturally, a lot of traders are asking the same question. So maybe you are asking the question too, and that is, are we going back to the range high? Is this the bottom? The answer is maybe. But before we talk about targets, you need to understand what kind of range we are actually dealing with. Because not all sides of the ranges are created equal. And we look at the left side of the range structure, something immediately stands out. The move from the range low right here to the range high, it wasn't explosive. It wasn't in a straight line. It spent literally months rotating. We saw pullbacks like this. We saw consolidation phases. We saw traders getting trapped on both sides. And most importantly, we saw liquidity build up all the way. So what does this mean? Every pullback created new participants, new longs being opened. Every consolidation like this created new fuel. So that's why I would call it healthy auction. The market was basically constantly attracting new traders, creating liquidity that could use it as fuel for later expansion. Now compare this side to this side of the story. Completely different. Why? There weren't many meaningful consolidations. I see only one. There wasn't much participation created, no pullbacks created. It was just mostly displacement, like here. Boom, displacement candles, and it was chaos. So this is the part where this range is getting really interesting. Because if the left side built liquidity and the right side removed liquidity, then reclaiming the range isn't as simple as saying, okay, the price swept the lows, therefore we are going back straight to the highs. The real question now becomes, where the fuck does the liquidity come from? And that's exactly why I started digging deeper into the order flow. After the order flow, I will give you 3 possible trade scenarios, but first we need to know the key levels. Okay, we are in exo charts and I have my big trade filter at 15 million. So we're filtering out all the smaller trades and we see something beautiful happening at this point. We see 20 million big trades incoming, protecting the price. And now in this weekly candle, we see that we have sell side absorption. So in my live stream today, I told the viewers like, okay, this is a really key level. The red box is a key level. Why? We see a naked point of control open here and we see the 20 million buyers that needed to hold the line. And guess what? They did it. Okay, so because the buyers absorb the sellers as we speak, there are a few key levels we should look at. The first key level here is this 16 million sell cluster at 66k, and we have 2 sell clusters of 70 million at 68k with a little imbalance. Okay, so this is a nice target to look at for the price. If we look higher, it might be interesting that we have the previous month low at 72k and we have filled buyers at 71.5. Okay, so if the price pushes up like this, if the price accepts above here and the price goes up, I'm looking at those 3 levels here. So now the question rises, okay, how does it goes hand in hand with our range? So we have 66, 68 and 71.5. So if we clean up the chart, what we will need to see, first things first, is we need to trade and we need price acceptance above the range low. We currently tested the range low and now we are trading below it. Buyer stepped in, so I am expecting a little bit of a choppy phase here, a rebalancing phase to see if we can reclaim the range. If we fail to reclaim the range, it will be really easy, guys. The price will go lower. If we fail to claim the range low, there will be no stopping us. Okay, why will there be no stopping us? Because the point of control is tested, the buyer stepped in, and now there is nothing left to hold the price back. I'm looking at 48 to 50k next. Okay, that is the most bearish scenario we can get here. If we can find acceptance here and the price can push higher, I am expecting 66, of course, for the first reaction, but I think this is no good. We see nothing here. It's not a real, not even a high to be swept. So I think we won't stop at 66, but of course, because it is a key level in the order flow, we want to see how the price reacts for maybe a short scalp. A more logical level for me is sweeping this high, and I think a lot of traders will look at a fair value gap here. So the second one with the, let's go back, with the 270 million clusters and the imbalance we see right here is a nice target to think about. Okay, but still, we will possibly see a reaction here. But I think it's not high enough, because if we are range bound, the price tends to go back to the mid level. And if we go back to the mid level, we mostly will stop at supply levels. Okay, so 73 to 74 makes a lot of sense. We even see a little bit higher, a bigger supply, and we see highs still open here. So this makes a lot of sense to sweep. We are a bit in the upper range, so I don't know if we will go there, but this one for sure. I mean, this makes a lot of sense. We will sweep and test this wick here. Well, basically it's a no wick here. So what I'm thinking, if we find acceptance in the range and then we push higher, we sweep this high, the price goes a bit down, but the bulls are still very strong. We come in the fair value gap right here. Of course, traders will respond. If we push higher, we will go to the supply. Then we are trapping retail with the ID. Okay, we are going up now, and then here we will find some distribution, and then the price is ready to go lower. Why? Now we saw consolidations. Now we saw pullbacks. Okay, now we created a liquidity curve like this here, and that gives us fuel for the move down. So for me, I'm trading really simple, guys. Well, it doesn't look like it with the order flow, but if we disrespect the first supply, that means the bulls are in control and we can get higher prices. So what I want to see for a good short is I need a distribution model on the lower time frames in the supply zone. That's my cue to go short. Okay, if I see that, then I'm like, okay, we broke the low. Now I'm short, targeting the range lows, or I'm targeting even 48 to 50k. Okay, like this. Okay, so this would be a perfect short setup for me. Also, if we fail to reclaim the range low and we break the current low, I am also shorting just like this. The stop loss can be above the range low test, and then we play the breakdown. And I would play longs if we find acceptance and we see a breakout. And obviously we know where to put the stop loss. We can put the stop loss below the low. Why? We know 20 million buyers are protecting our stop loss. We even can go here because this is already tested, and we will target the fair value gap as TP1 and we target the supply as TP2. Okay, so this is what I think for the upcoming days / weeks. Let me know in the comments, what do you think? Where is the bottom? And like and subscribe if you like this content. Thank you so much, guys. See you next week.